All right. Well, now we're going to look, scholars, at the idea of how we account for the transactions here in the pension. So we're going to start out by taking a look that this individual just got their 401k statement and they're wondering about it. And of course, then the mail comes in and there might be money that's going into the pension. And of course, they're sending checks out to all those recipients. So our very first transaction is the general fund contributes $150,000 to the pension plan in compliance with the formula. Well, when the general fund does that, the pension is going to, in this particular case, debit cash and credit employer contributions. Now, the second journal entry, the city invests $120,000 of the money that it just received. Well, that journal entry is debit investments for $120,000 and, of course, reduce cash by the amount of the investment made. The next transaction is the city paid $3,000 in miscellaneous benefits to employees. So we have benefits going out the door. There's your debit, it's kind of like an expense, and we credit cash. All right, the next transaction that we're going to see is going to be the city incurred $16,000 in administrative expenses. Well, you debit administrative expenses, there's your charge, and you credit accounts payable in this case. The next item is the city actuary reviewed the city's pension liability and determined, based on changing mortality assumptions, that the pension plan was understated by $50,000. Well, in that case, no journal entry. Nothing is required. Obviously, you have to start thinking about making it up. The next item is going to be the pension fund invest yield cash returns of $15,000. So you have your investments earning $15,000. Debit the cash you just got and credit interest or investment income. Then the next item is the assumed return on the plan was less than the amount actually achieved, all right, by the investment program. How would the city record the difference in investment performance? Nothing. No journal entry there at all either. So finally, we have some more facts for you. The next item here is the custodial fund. The city received $150,000 in tax revenues that it held on behalf of Easy City. So now in the custodial fund, we're going to debit the cash, $150,000, and it's due to other governments. So it's a liability that we have to pass it on. Then the final item here is going to be that the city remitted $120,000 of tax dollars it received on behalf of that. So it's now going to give the city that money. So it gets rid of the liability with the due to other governments, and of course you credit the cash. So that would once again be in the custodial funds. So hopefully that helps you understand a little bit about that unusual fund that maybe you haven't spent as much time on as some of the others, and hopefully this will reinforce the information. You're now ready to try some problems.